Calgary gets the love, Edmonton gets the math. Today, we're finally going to solve one of the age-old questions of investment real estate in Alberta. Calgary or Edmonton? Which one should you invest in? Hey gang, how's it going? Russell Westcott here. So I was sitting there, one of the things is you're going to be watching this video on YouTube, and one of the things they say is, why don't you take one of your best videos and update it or refresh it and continue going forward? One of the best performing videos I have on my website is when I analyze Calgary versus Edmonton, on which one has been the best. And whoops, embarrassing to say, it's been 4 years since I updated that one. So you know what? No better time than like the present. So let's get into this. We're going to talk today about why Alberta, and then also, if you've been following along on the videos that I've been putting out, you'll see the GDP numbers where we did that comparison. Then you'll see employment numbers, and you'll also see population growth. One of the questions that often comes down to is, as you start going down the chain and going down there, is, do I invest in Calgary or Edmonton or neither? Do I go somewhere else? Do I invest in Red Deer? Do I invest in Slave Lake? Do I invest in Grand Prairie? Where else? So use this analysis that I'm about to share with you for you as a gauge and a set of lenses to look through when you're investing in your marketplace. But we're going to take a really deep dive into why Calgary, why Edmonton, and which one deserves your capital. Now, the first thing I'm going to share with you, everybody here, is we're not talking about lifestyle. Okay, we're not talking about the one that would be best for you to live in for your lifestyle. Okay, we're not talking about the love that Calgary gets with its national recognition, its stampede. You might be watching this during the stampede. We're not talking about its proximity to the mountains. We're not talking about the beautiful rivers that flow alongside it. We're not talking about lifestyle. Now, lifestyle is great, right? That is a decision-making criteria for where you want to live. What we're talking here about is pure investment grade. We're talking about the math. We're talking about where the serious capital needs to look at. We're talking about affordability, price to rent, yield numbers, risk-adjusted returns, and the downside protection all at the same time. So here's the big question that I'm going to pose out to you here as well is, which market, based upon today's variables, which market gives you the best risk-adjusted return today? Okay. Now, in order to really tell the full story, we have to go. So in order to take a step forward, we have to take a couple steps back. So what steps back are we going to take? Step back we're going to take first is we're going to take a look at Canada. We're going to take a look at the Canadian market first, and then we're going to drill down into each of the individual markets going forward from here. Like truly right now, I believe, Canada is in a housing storm. The two of the largest provinces, the largest one being Ontario and British Columbia, arguably speaking, they are 100% the two largest real estate markets. Now, I might get this number wrong, but directionally it's probably correct. I think in the analysis that I did, and I probably should do this analysis, the Toronto real estate market and the Vancouver real estate market represent probably about 60% of the national housing number. When you strip out those two markets there, that's a better context of what a normal market looks like. Okay. So, but taking a look at just Canada in general, right now, our RBC Affordability Index is now out. Vancouver's affordability, although has improved, same with Toronto, they both have improved. However, they are still ridiculously high. That's something that you just want to take into consideration. Housing costs are very high in those marketplaces. And since probably 2022, those two markets of Vancouver and Toronto have been on a free fall down. If you've been following along on the condo collapse out in Ontario and Toronto, that is it's a race for the bottom at the moment, and it hasn't caught its traction yet. I remember it was I think it was late 2021. I'm going to go back and I'm going to check this after this, and it's something maybe I'll bring out. I was actually on the Rockstar Real Estate podcast. It was 2021 and 2022. And I clearly said, you know what? The one big worry I have about Ontario real estate is that I believe that the downtown Toronto condo market is going to be ground zero for something for a lot of pain. And I should have probably announced that a little bit higher. And, hindsight is always 2020. And it looks like I nailed it, probably about a year off. But at the same time, it truly was ground zero for something bad to happen. Now, is it going to come back? 100%. It's no market goes down forever. No market goes up forever. But right now, and I've mentioned this on a couple different podcasts and episodes that I've been on a part of, is that it's still too early. In my personal opinion, it's still too early to get into those markets of Toronto and Vancouver from a standpoint of the following is the prices come down, yes, but housing prices that are cheaper now than what it was 4 years ago is not an economic fundamental. You need to start seeing the GDP growth. You need to start seeing the population move in and not move out. You need to start seeing the jobs come back. When those economic footings get solid again, and then we start seeing a trend of things going up, then would be the time to get in. I still think there's more pain to happen out in the Ontario marketplace as well. Okay, so moving forward is I believe at this moment that truly Alberta is that pressure release valve. While Toronto and Vancouver, they see out-migration, people moving in. Make sure you follow that detailed presentation that I delivered on the population of the one of these things is not like the other. Like literally Canada lost population. Two provinces, big provinces lost a lot of people. Only one province, and Saskatchewan kind of went flat. Only one province grew on an annual basis based upon the Q1 numbers from this year. So make sure you follow those trends as well. Okay, so right now, when you factor in that population growth, about 2.9% population growth in Alberta versus a 1% in Canadian. Actually, the number is actually declined on a very real basis as well. So, but remember, as always, for those of you that are looking to invest in Alberta, it's not one market. It truly isn't. Calgary is a lifestyle favorite, and Edmonton is an investor math. I've put up here on the screen right now the differential between the average price on that. Now that number shifts, obviously, and stay tuned. Bookmark that in because I'm going to come back to this number towards the end. This is an important thing when we come back to this at the end about that. So the lifestyle versus the math. Now, what I've done here for everybody is I've broken it down no different than that first video. You might actually want to, if you want to do something, maybe I'll put a link below to that first video. How did I do on the prediction? How did I do on that forecast from that one? You might want to go check that one out. What I've done is I've put together another 4D framework for you to check out. So the first D framework is demand. Is there demand required in that area? Then the next one is dollars. Do wages, affordabilities, and rent level support the investment amount? Durability. What is the stabilized employment base? Is it based upon a wide, diverse, or is it maybe kind of like a one or two trick pony? And then the last one is the discount. Are there discounts that you're going to get? Because at the end of the day, what we want to have is we want to have our money go far for us. We want our money to work hard for us. And, you work hard for your money, and what you want to have is you want to have those investment dollars working harder than you do for the money. So what you want to find is you want to find a good, what's the frame I'm trying to look at? You want to find a very good value play and something that has an asymmetrical upside opportunity for you. That's what we're going to try to identify here for you as well. Okay, so getting into the first D here is we're going to talk about demand. We're going to talk about the demand. So really right now, Alberta leads the country in population growth. Is really, if you just factor in each of these variables, Right now, Edmonton is the star, the shining star of. It's actually the highest in all of the country, to be honest, was Edmonton had the highest population growth of all. Edmonton had a 3% population growth from 2024 to 2025. Calgary was just shy of that. Like, let's put it this way, 1 and 1A. It's not that big of a difference. Now, from here, interprovincial still points towards Alberta, right? Ontario, BC, Quebec, they're losing people and they are moving into the Alberta marketplace. Right now, in the last, in 2024 to 2025, there was over 11,000, almost 12,000 people in Edmonton, and Calgary's net provincial in-migration was just under that as well. So right now, if you're actually looking at it, and if you're to be honest and doing take a look at this, it's pretty close, right? From a standpoint of population and people moving in, it's almost a tie, with Edmonton getting just that slight nose and nudge ahead with that as well. So the key thing that you want to take a look at here as well, and I've done an entire deep dive video on this. It's probably, depending on when you're watching this video, a part of the sequence. It might be out now, or it might soon to be coming out. Is that where is the rental demand? Okay. As well, I've done a very deep dive, and when I get to that one about the housing supply and the supply that's been added, more so I go more into Edmonton, but the analysis would hold true for Calgary as well. Take a look at the numbers, and what I would say, the simplest answer I would say is that there is a softening of things. Now, think about this for a second. Let me give it to an analogy. You're flying down the highway going 140 kilometers an hour. And then all of a sudden you enter a zone where you have to slow down to a 90 zone. Does it feel like you're going backwards when you have to actually slow down to a normal pace of things? That's what's happening in the rental market right now. It needs some time to catch its breath. It's added some supply. The in-migration has slowed. It hasn't stopped. If you think the interprovincial and the in-migration is a challenge in Alberta, count your lucky stars that you are investing in Alberta, that you actually are seeing positive numbers. There's actually a mass exodus out of many major metropolises across the country. Now, that's a bad day. That's going from 160 kilometers an hour down to a school zone of 30 or less, okay? That's the thing you want to do. Is I firmly believe, and I will prove that point when I get to the presentation on the rental market in Edmonton specifically, is that it truly is taking a breather before its next run up the marathon, or the race here. Okay, so that's the first one. The first one was demand. Now we're going to talk about dollars, jobs, employment income. Now, I've done a very deep dive on it. I'm just going to touch on a few things here for you on this one. Is it's important that you follow the metrics. Now, this one, the jobs thing, and I'll probably put a card around here for that those jobs numbers were like literally hot off the press. These ones were a month old. Okay, so these are the numbers there. Actually, here's the message I'm going to share with you. The job numbers have actually improved since this slide here as well. So you might want to check out that video as well. So here's the unemployment rate. Calgary gets a little bit of a nudge that the unemployment rate is a little bit better in Calgary versus Edmonton. Both of them are in line with what's going on a national basis. Edmonton's unemployment rate is a little bit higher. Right. The one thing that it did have going was it had a lot more people that moved in, and based upon that rent to price math, make sure you look at that number going forward. But here's the point, the message you want to also dive into as well, is that truly Alberta has the strongest wages. Now, like I mentioned on that other video, the numbers have just slightly changed, but they're extremely directionally the same here going forward. The Alberta number is the $1,383 is the weekly earnings. Sorry, that's Alberta's, and Calgary's weekly earnings are $1,338. So the key thing is you always want to find is affordability. This is one of the variables that I follow, and one of the metrics I follow extremely close is how affordable a market is to invest in. That is one of the key things. Is thing is, it's great that you have your market going up in value. However, who's going to eventually buy your property from you? Who eventually there's going to come a time when you want to sell. And there's a lot of markets in this country that the markets are frozen. Like the market is just at a standstill because they can't sell it because it's still too unaffordable for a person to buy in. And if you get to a point where entry-level housing is unaffordable, you don't get the move-up factor, people moving up there as well. So taking a look at this graph right here, very clearly, Calgary is at a 41% affordability rate and Edmonton's at a 32%. Think about that for a second. Edmonton's affordability is more than half of what a Vancouver and Toronto's number is. That is healthy for the long-term viability of a city. So here's the thing: is Edmonton's not just cheap, okay? Everybody says, well, Edmonton's just cheap. I'm going there. Edmonton is a value play, okay? Now, it's 100% true that the price is less than Calgary, but I believe you get more for less in Edmonton there right now. And the numbers speak for themselves based upon the affordability chart there as well. But that's what I mentioned before, is truly affordability protects the exit. It really does, is it makes sure that you have a buyer's pool to sell to at the end. The end of your period, you want to make sure you have a person that you can sell to, because if you don't have somebody to sell to, then what's the point of hanging on to at the end? And if the market is locked and frozen, like many markets across the country, you want to make sure that that fundamental is in place. Okay, so now moving on to the third of the fourth D is the durability. Okay, so how durable is the marketplace? How diverse is the marketplace? How is it just the one-trick pony, or does it have more to offer? You know, I believe Edmonton is a lot more of a diverse workforce than Calgary, right? It's got the University of Alberta. It's got the government. It's got the major healthcare network. It's got a logistics and distribution hub. It truly has a lot more going for it from a standpoint of a diverse marketplace and a diverse rental base. Distribution. A lot of the distribution centers that you will see will still be going through Edmonton. Edmonton is one of those hubs where a lot of things go. Just drive around, just go see the new Amazon distribution plants, just see that Edmonton is a distribution hub. And then also, if you really want to take it the next step forward from there, it truly is the hub to the north. Everything going into the industrial heartland, which is just outside of Edmonton, everything going into northern Alberta, to the oil sands projects, has to flow through Edmonton. All that distribution and all the manufacturing, all that will go through like the Nisku area as well. Now, the one thing I'm going to do is I'm going to put a couple caveats on this as well, is just make sure that you don't get lazy in your assumptions. What I'm trying to say is that the rental market in both Calgary and Edmonton went way too far to the one side. It really did. I'm a firm believer in, and I used that analogy a little while ago about the traveling down the road. Okay, so just think about it. It's like a clock. It's a pendulum. It went way too far to one direction to the other. And I'm going to show with you, when I do that analysis on the rental market, that truly the market covered up a shortage that was happening. Sure, lots of rental supply came on, and we'll dive into those numbers. Most of it got absorbed. It's getting absorbed. That market is now slowing down again on the completions. In-migration is going to happen. I've seen reports that they're going to start turning the tap on immigration back in again. A good portion of that will move out to Alberta. But the message I'm really trying to say with this one is, don't make the assumption that your rents are going to grow at 3, 4, 5, 6% like they were the last couple years. Having a flat rental market for maybe a year or two with the next run up is the safe assumption to have. Okay. Both markets have softened. They truly have. Both markets on the rental basis have softened. This is a chart about vacancy rate. Calgary is now at about a 5% vacancy, and Edmonton's at a 3.8. here's the thing that I often chuckle at when people sit there goes, oh, well, it's at 3.8, it's at 5% vacancy rate. Okay, I get that. That's higher than what it has been. But doesn't that also mean it's at a 95% occupancy rate? Don't you want to be on the 95% of the occupied units as opposed to the 5% of the unoccupied units? And I'm going to just a quick aside here a little bit is more important than ever. Having a really good lease-up team is important. You have to take those extra steps to make sure that your properties are being leased up. Having a person live answer the call, booking the appointments, showing it the next day, having the sales calls, not just relying upon lazy sending it to a form, having somebody book at it, then go to a booking form to then book something out, and then you get to them in 2 or 3 days. You need to jump to the pump. Right now, if you want to get ahead of everybody else, you got to make sure that you are jumping to the pump ahead of everybody else, and there's a personalized service, and sales skills and answering the phone live and things like that are very important right now to get your units rented above everybody else. All right, so the vacancy rates there, like I said, Calgary at 5, Edmonton at 3.8%. The next thing I want to take a look at, and like I mentioned, we are going to do a extremely deep dive here for you, is to take a look at that supply number. And I'm just going to mention it at the moment right now as just a placeholder for the context of this presentation is I did do a very deep dive analysis into the Edmonton market about supply. So that's the number you want to take a look at is more supply coming on board. I believe Calgary added even more supply than Edmonton did during the time frame. So I think that's another feather in the cap for Edmonton. Then the last D that we want to talk about here is we want to talk about a discount. Are you getting value for your money? Are you buying properties that are going to significantly outperform what you're looking for with things? So Edmonton is just not cheaper, right? Everybody thinks that, obviously the price is lower, right? So there is a significant discount between the price point between between Calgary and Edmonton. Right now, Edmonton's at about $432. And so there's a price discount of about 24% based upon that benchmark rate from April. Now, the number changed very marginally recently, but there's a 24% discount between Calgary and Edmonton. Okay, so remember that for a second. That's an important metric to have. Now, when you compare an average 2-bedroom unit to rent, there's only a 16% discount, the discount between Calgary rent and Edmonton rent. So think about this for a second. You can buy it at a cheaper rate. And of course, the rents are a little bit lower, but the discount you get off of price is significantly more than the discount that's off of rent. So how does the math stack up on that as well? So here's the math. This is what it looks like. Now, I'm going to share something here for you. Let me just look you in the eye here. Maybe we'll get a little punch in here as well. So the analysis I'm about to share with you here in a second is not relevant for your investment. It's going to take an average property and an average rent and calculate an average yield. Okay. You don't buy average properties. You don't base upon average metrics. But what this is going to share with you is it's going to share for you a comparison analysis is really what its main intention is to do from here. Okay. So the rental yield is right now the yield for Calgary rental yield is about 4%. The Edmonton rental yield is about 4.45. So what that is the 2-bedroom rent divided by the 2-bedroom, the average house price for both markets. So there is about a 10.3% yield advantage in Edmonton versus Calgary. That's one of the most important things that I want you to factor in and to take into consideration going forward. If you remember nothing from this video, remember the following. Number one is that Edmonton is a discount price and it is a discount on rent. The discount on price is higher than the discount in rent, which gives you about a 10% advantage. That's how much further your money will go in Edmonton versus Calgary right now. Okay, so that's the key thing there of that. But make sure that you underwrite the deal. Make sure that it fits for you. It's just not every property in the area makes sense. Make sure that there are you drill right down into the demographic and the tenant profile, and then there are potential risks. This is one of the things I will always share with people that what if there is a downside? What if there is a population slowdown? What if even supply gets even greater? What if there's even a harder time to risk? All those things are variables that you put into the calculator to determine the market variability for you. That is truly why I've actually gone through this exercise of doing all these videos. And I believe it's going to be turning out to probably be about 12. I sat down, it was early in the start of the year. And I said, okay, I really need to slow this down because we were looking at more opportunities. I said, it's time to do the research. What is the research pointing towards? Let's break this down and let's methodically go through each of the steps that we need to go through. And let's see if the research holds water or if it's time to pivot. No different than like what we did in 2022. And we told people to hardcore get back into the Alberta marketplace. Is the Alberta marketplace ending its cycle? Or is it taking a breather and a plateau before the next cycle up? That's where we went through and pragmatically and systematically went through every single step of the process to analyze it. And that's what I'm doing throughout this video series. I'm not going to tell you what, well, maybe I will. I'm going to share with you what my take of this was. I'm more bullish on the Alberta marketplace now than I've ever been in the last 20 plus years. Truly. I believe based upon long-term economic fundamentals of things that are coming down the pipe. Now, sure, there's some black swan events. There's some things that might come down that might happen. We can't control any of those, but controlling the controllables, the fundamentals are lining up stronger than I have seen in a long time. And if we can just... I'm making maybe a political comment here. If we could just get out of our own way and stop stubbing our toe, Canada, and primarily the West, the prairies in the West, I believe is the entire economic engine that's going to drive this bus forward. So I'll get off my soapbox here for a second. So those are just some of the risks from there. So let's just really kind of summarize it up. Like, how do we take this and how do we put this into a summary? Okay, so let's take a look at the metric, population growth. Edmonton gets the nod on the population growth, right? So with the next metric we want to do is the benchmark price. Edmonton gets the nod on the benchmark price. You're paying a little bit less. On the affordability, the affordable is significantly better in Edmonton. The purpose-built, the vacancy rate is significantly better in Edmonton versus Calgary. And then the yield proxy, meaning the yield of the average rent divided by the average price, you're getting over a 10% discount in Edmonton versus Calgary. But at the end of the day, Calgary's got the mountains. Calgary's got the lifestyle. Calgary might be the place to live. Now, here's maybe let me look you in the eye here. Maybe you want to live in Calgary and invest in Edmonton. Maybe you already live in Calgary and you want to invest up in Edmonton. Your investment dollars don't care about the lifestyle per se, right? Live where you want to live. Live in Toronto. Live in Barrie, Ontario. Live in Mississauga. Live in Vancouver. Live in Burnaby. Live somewhere else. But put your investment dollars to work in the markets that are going to work strong for you. All right, gang. So that's what we're going to do. This is the entire presentation. The updated here is truly Calgary gets the love. Edmonton gets the math. Now, if you're interested in taking the next step that's right for you. Maybe you've watched a few of these videos. Maybe you sit there and go, Russ, you know what? Some of these things make sense. It 100% makes sense. I'm looking at taking the next step. First of all, I would encourage you to, number one, is subscribe to the channel. That's one of the most important things. Watch all the videos in this series that is being produced. The next thing is if you would like personalized help. if you'd like a second pair of eyes on what you're doing, if you would like to even just that exercise that I went to early in the year of just breaking it down methodically, if you want to share with me what your research is showing for you, by all means, book a consultation. I have some spots available in my calendar that I'm looking forward to having conversations with people just like you that maybe are confused about what's the next step, or you're just not sure how to restructure your portfolio. That's another thing. I'm just going to quick aside here. Just wait until you see the presentation that we're about to talk about restructuring your portfolio. A couple of my clients have literally taken things from like 3 units up to 30 units, or taken things from 6 and 9 units up to 60 units or above. Some of them are building funds out now, getting it to 100 plus units. If you're interested in growing and scaling your portfolio, come talk to me. I can definitely point you in the right direction and definitely give you a second pair of eyes and definitely help you on your next step forward. Okay, gang, hope that helps. Talk to you very soon. Make sure you subscribe, and the next video is coming up very shortly. Bye for now.